Hello, everybody. Thank you guys for joining. Apologies for being a little bit late. I'm just going to give a couple seconds, 30 seconds-ish for the remainder of our guests to continue to join. Excuse me. Get some slides up here so you guys know what you're here for. My name is Deanna Haas. I'm our Vice President of Agent Success and Partnerships. And for those of you guys who have been in our network for a while, have started to see that we've expanded past just Sold.com sending you guys out referrals. We are starting to really invest into just general education, general resources to agents in our network, which is something we're really proud of, right? Not a lot of, I guess you can call it still a lead generation companies, care further about the agent's business. And I think that's where we're trying to stand out. We want to be able to be the resource that you guys have for your lead generation and working our referrals. But additionally, we want to bring added value to you guys in the form of different trainings and different learnings that can enhance not only your business Sold.com, but also your business that you guys are just getting organically on your own. So today's kind of learning series, training, however you want to talk about it, is all about mortgage, right? Super hot topic. We hear so much about it in the media. We hear so many different things about people getting scared as it relates to what's going on. Interest rates are so high, prices are going to drop. Like, I guess depending upon where you are in the country, you also have felt that differently. In Southern California, we really did not feel or see anything. We all kind of braced, and buyers that were on the sidelines were saying, I want to wait because I keep hearing about these home prices are going to drop. And then they maybe dropped like half of a second. And then I don't know about you guys, but I'm actually actively trying to purchase a home. And just went to an open house where there were 260 people that went through that open house over a weekend. So California is, whether you want to call it back or still alive, we are really, like, everything is all good, but people are still very afraid. So I've invited our special guests, which are from eMortgage Capital. So who you're seeing on the screen with me today is Elliot Laurance. Who you're not seeing on the screen is another person from eMortgage, which is Ryan Reed. And so this is a little bit of a hiccup with our own tool. It only allows for me to have two hosts on here. So unfortunately, you won't be able to see and interact with Ryan, but he is there and he can help answer questions via chat. So today's agenda is really going to talk about what's going on in the mortgage industry, right? Empower you guys with information to talk to your clients, to make sure that they know what's going on and that you guys can speak in an educated manner about how to get them off the fence. So along those lines, also how to overcome that objection, right? There's so many people sitting on the sidelines that have been sitting on the sidelines since probably 2020, waiting for this kind of mystery market to continue to drop. And again, it hasn't happened. We had this huge uptick over the last couple of years. We saw, yes, it stabilized a little bit at the end of last year, but there isn't this big drop that's happening. But also there's products. And there's products that you guys have heard about. There's products that you guys have utilized and recommended to your clients. But there's also products that maybe you don't know fully how to explain to your clients. And so that's what Elliot's going to help us just really, really walk through. So before we get started in that, I want to make sure that you guys know how to use this tool with chat. So not that you guys have all been in webinars now since 2020, we're all super familiar with it, but I want this to be super interactive. I want everybody to walk away with everything they expected to take out of this. So utilize the chat. I'll be monitoring this as we go through it. Ask questions that you guys have, and then we will make sure that we're actually answering them and going through it. So without further ado, a quick kind of further introduction. Like I said, I have Elliot on the call. He is a division manager. Ryan Reed is also on the call, but is in the background as a division manager of eMortgage Capital. Elliot was within the top 1% of loan officers across the country. And so it's really great to talk to people who actually know what they're doing, right? Because I know that you guys probably have your preferred lenders, you've worked with lenders before, and people have different levels of education. You want somebody just like an agent who is doing constant transactions, who knows how to work with the easy files, but also knows how to get through those files that are a little bit more difficult. And these guys are really, really pros at it. And that was why we reached out to them and were proactive about, we want to talk to you guys because you guys have lots of different options, products, but also the both of you guys as people are somebody who care a little bit differently about how your clients operate, but also have the ability to work around lots of different clients. So Elliot, thanks for joining us. Mortgage updates. So let's kind of get going. What's going on, right? We hear it in the media that everybody should be afraid and the interest rates are at all-time high and that like we're all scared. What's going on right now with mortgage?
Deanna, thank you for the introduction and welcome everybody to the webinar. Glad you guys are here. Deanna, like you and I were talking about, I'm a very transparent person, so I'll be very transparent throughout this entire webinar. Mortgage market updates, where we're at right now is we're just kind of stable. The media, if you guys listen to the news and you have clients who listen to the news and constantly trying to give you information on what's going on in the market, usually what's being reported is something from at a minimum 1 week ago to 2 to 3 weeks ago. So we kind of constantly have an influx of just misinformation out there. So just really where we're at right now is we're stable. We're not seeing the huge highs that we were seeing in 2022. We're also not seeing the huge lows. Right now, for an average 30-year interest rate is probably floating around in the low sixes. And, this graph right here kind of shows you, we started out last year, it crept into the threes, we peaked around the sevens, and, now we're inching closer towards like a high 5 interest rate, but we're stable, which is good. It gives consumers a lot more confidence when they're going to buy a house that we don't have a huge swing from day to day. So it's been really nice to have that available.
And it seems like things are stabilizing because I know that I mentioned at the beginning of the call, like I'm actively shopping. I've been in this industry for quite some time now. And I was in subprime lending years and moons ago. And back then, if you had perfect A paper credit, like you were getting like a 6.5%, 7%. And so we obviously saw record-breaking dips in like 2020. I have friends that got into like 1.75% mortgages. And so yes, relative to those 1.75, 2% rates, like they do seem high, but these are still historically low interest rates.
It is. And it's a conversation that you kind of have to have with clients, because what happened in 2020 and 2021 is it became a rate war in the sense it didn't matter how much you paid for the interest rate, right, or what the cost ended up being, but it became a competition amongst neighbors, amongst friends. You could go to the supermarket. It's like, oh, I got a 2.75 or I got a 1.75, right? And nobody took into consideration what that was costing to get into that rate, or the fact that a lot of consumers, they refinance every 5 to 7 years. So even if you had it, they're going to temporarily have that for the most part. So we still have historically low rates. We're still lower than last year, which should help, consumers with some of their confidence and what their affordability is. And just having that conversation with them that, yeah, look, this isn't your grandparents' 18% rate, but if you look at the last 5 years, it's not too bad.
Yeah, for sure. And so I'm sure that, the agents that are on this call are everybody has clients that have been sitting on the fence for a while, right? Because when the 2020 spike of home prices hit, as well as interest rates dropping, buyers flooded the market, even buyers who maybe didn't think they were going to want to buy a home. But then people were just constantly trying to get into properties, getting outbid for things. And then they started hearing rumblings that the market was going to start to shift. So these people kind of took a back seat, whether because they were forced, because they couldn't get their offers accepted, or because they wanted to just watch and wait until things happened. Because again, for me as a consumer, I kept hearing, our home prices are going to drop 30%. And so by nature, right, you are kind of waiting. You're like, well, then why the heck would I do anything right now? We saw that like stall hit a little bit to those home prices, like skyrocketing around like July-ish. So there are a lot of people on the sidelines that are kind of waiting for this like drop of interest rates, this drop of home prices to happen. So a lot of agents on the call like have these people that are like, please do something. Like this thing that the media is scaring you guys all about isn't actually going to happen. So what are things that you're saying to your client about interest rates that are too high, and like, should I wait?
For sure. So I love the education aspect of this, right? I had 27 pre-approved buyers who all basically paused what they were doing in the middle of last year because of the interest rate spike, right? The biggest conversation I had to have with them, which is what we talk about on this slide, right, is it the rate that you're scared about, or is it the payment? Because if you can afford the payment, great. We have options to help you, circumnavigate this issue, and we can help with the affordability. you have to have that conversation with them as the expert, right? So whether you're an agent, whether you're a broker, whether you're in mortgage, doesn't matter what you are, we're the experts and we have to try and calm those fears. And that's why we have these different types of solutions. So the first thing that you want to figure out with these people, like you, for example, right? Can you afford the payment? It's really not about the rate. It's about the payment. Like I said a minute ago, people on average refinance every 5 to 7 years. You can always change your payment. You can always refinance, right? You can't change that initial purchase price.
Yeah, it is a good point. Like we were really close to purchasing a property and through negotiations we lost, but we kept seeing that purchase price go up and the interest rate unfortunately wasn't doing anything for us either. And so I kept, like, for my husband, I'm like, okay, we have to just continue focusing on that payment. We can still afford the payment. And it is like this game you kind of mentally play in your head, but you're like, but I'm buying it for this amount of money and my interest rate is this amount of money. But I'm like, but we can still like very safely and comfortably afford that. So I think it is really like talking through that as much as you possibly can, because I felt our agent kind of pushing us a little bit higher and higher. And I knew we had to play that game in order to still stay in contention with that property. But I think as soon as we started to shift our thought process and she really got us to understand that are like, can you afford that payment? We're like, yes, we can. Then it would allow for us to be a lot more flexible in what we could actually do. We wound up losing out to a cash offer with no contingencies, but it did allow us to push up a lot higher. So I think that's really good tips of everybody should be talking about that, because even for somebody in the industry, it is something that like is super important to make sure that people understand, like focus on that payment. Don't get so lost in that competition of, well, my buddy has the 2% interest rate and I'm getting a 6. You're getting into the home that you want. You're actually getting a home, which is hard for some people to just generally do, but also you can afford the payment.
Yep. Yeah, that's a perfect example right there. It's normalizing where rates are at now, because this is, where we're in. We don't have a crystal ball to see what's going to happen in the future, and we don't have a time machine to go back in time, right, and get you that 2% rate. And odds are, if you were trying to get that, 2.5% rate a year and a half ago, that house is probably $150,000 more than it is now. Yeah,
and it balances it out too. I mean, it's all kind of relative at that point. And so for somebody who's telling you, like, because I'm sure that there are people that these agents are following up with and they're giving them that hard response of, I just want to wait. Like, what would you tell in those cases if they feel as though they just want to wait at that point?
For sure. The main conversation that we have with people now, again, it goes back to payments. So can you afford the payment? Great. What's holding you up? I want the 3%. And that's where we, pivot into the 3-2-1 buy down, because if you want a 3%, we can get you into 3% today. We have a program that's able to do that. And all of a sudden a light usually, switches on for our clients, because we know that they can afford the payment now, but it's like, let's figure out how to get you some of that affordability in the next couple of years while we see what happens in the market. All of the fancy tools that I pay for every month indicate that rates will eventually go down. And what we're seeing with inflation, it's like an indicator as well that rates will eventually go down. But let's buy you some time. Let's make this a little bit more comfortable for you. It's going to give you some time to budget. It's going to give you some time to plan. And then we can kind of figure out what our game plan is moving forward there.
Yeah, for sure. Because Michael in our chat brought up a good point of a higher rate is better than overpaying for a property. Like, why are you going to overpay for something that's not worth it when you're just paying that interest rate that you can get out of, right? Like, you can talk through those different options for people. And so I think that's like a huge like talking point here. And I think it's like, to that point, I think the whole point of this is a learning series. We know that Elliot's going to bring a lot of great things, but also part of this is also each of you guys on this call being able to share what you guys have been able to do. And so like I said, with Michael being able to point out the fact that, yeah, getting that higher rate versus paying $100,000 over is something I would do every day, because I can get out of that interest rate and refinance it when it actually does do something.
Oh, absolutely. Michael, that's a great point. If you look at answer C down there, right, this is a conversation I have with clients as well. Let's just look at a 1% difference in interest rate, right? A 5% versus a 6% rate. It's like $300 a month. the average property is going to gain like $22,000 in equity over the course of a year. This is a $500,000 property, right? So that's another way that I'll break it down to my clients, is just show them the numbers. Look, you might be paying a little bit more in interest rate right now. Interest rates aren't going to drop by 1%, but what you're gaining is the difference in equity, Also, now you're not overpaying for that same type of property. Where I'm at in Costa Mesa, so we did, I'm in 25 different states we work, but like just where I live in Costa Mesa, in 2021, we saw properties go from like an average of 1.2 million to 1.6 million in less than a year, $400,000 in not just equity, but in cost for consumers, right? It's really hammered the market right now. It's kind of hurt the area that we're in.
Yeah, for sure. 100%. And so I think as part of overcoming objections, it's loan programs, right? What loan programs can you get people into? And so I've mentioned a lot about my buying journey because I feel like it's something that like has enveloped my entire life, right? I wake up and I look for properties. I go to sleep and I think about properties. It's not interest rate right now. I think about properties and home prices, but we are actively looking at these buy down programs. And so some of you guys may have heard of it as like the 2-1 buy down, the 3-2-1 buy down. And it took a lot for me to understand this, even as somebody who's in the industry. And so as I'm talking to different real estate agents, I'm in Southern California as well. And I have lots of friends that are real estate agents, and they still kind of don't really understand the fundamentals of how it works. They kind of understand the high level, but have trouble explaining it to their clients. And it took me a minute, but this is a program that we're actively using because one thing I shared with Elliot is I rent currently. We are looking at as a first-time home buyer. We have currently an under market rent. So going and buying a home at what Southern California prices are is going to, in most cases, double our payment that we're paying. And so that's a tough thing to swallow. We want to get into home ownership. We want to start earning the equity, but knowing that we have to now pay double of what we're paying today is, again, a tough thing to swallow. And so I'm sure that there are some people that are in that position. Or for some of your sellers who want to sell their property but are afraid of buying their next home because there's going to be an increase, this, I think, program really allows for people to like inch their way into it. So this is a really great product to get people off the fence. Because I honestly think, like, my personal opinion is I don't know that we would be like as all in on buying a home right now if it wasn't specifically for this program. So Elliot, like in layman's terms, talk about like what's the buy down program? Like, how does that work?
Sure. And I'm assuming everybody on this call has at least heard of it, right? If you haven't, maybe, find a loan officer that will give you updates or something. But it's fundamentally, you can have a 3-2-1 would mean you have a 3% lower interest rate your first year, second, or 2% lower interest rate your second year, 1% lower interest rate your third year. The goal and idea behind this entire program is to refinance out of the loan before you hit that second or third or fourth year, right? So that you can, maybe re-amortize in a 30-year loan or look at it an ARM. But essentially, it's just a lower interest rate every year. It adds by 1%, the following year, and it's really just helped to build affordability for somebody.
Yeah, and this gives like a good visual like representation of that. And so that's why I said, for me personally, as somebody who would be doubling in essence our payment each month, this allows for me to not just go immediately to that doubled payment. It allows me like to inch our way up. So kind of talk through what this chart explains.
Yeah, so this is a flyer, and I do a lot of these flyers for all of my clients. This is one for a listing recently. It was like I think $1.3 million, right? But it just gives you a perfect example of, and this is only a 2-1. So imagine what a 3-2-1 buy down would look like, right? This example would start in the threes, but for year one with the 2-1 buy down, the payment savings is almost $1,400 a month, right? The second year is almost $700, and then year 3 to 30, you'd be in your original interest rate, which again, the goal there is to just refinance out of the rate prior to year 3. But it's very easy for clients and consumers to visualize, okay, here's what the rate is, here's what my monthly savings is. Because you can talk numbers and you can kind of get lost in the weeds, and there's a lot of other details that go into this and different cool ways to structure it. But really what people need to see is like, what's my rate going to be and what's my payment? And again, as agents or as mortgage professionals, really we want to be trying to focus on that payment for them. Hey, here's what your payment is. Can you afford it? Yes? Great. Let's get moving. Nikki had a great point. I just read your comment in the chat, Nikki. That's so true. If if the market was to drop, or rates were to come back down, you're back into a bidding war. I just ran into it with a property here in California in Lake Forest. There was 14 offers, multiple cash offers. My clients for this one are using the 2-1 buy down. There was a way that we structured it so they're actually able to finance it into their loan and not come with that out of pocket. But we're seeing it again. The market, it's already turning.
Yeah, it's awesome because I think again, like I'm going to use personal experience for it. For us, like if we're looking at 6% interest rates, just for easy math's sake, it drops us down in our first year to a 4% interest rate. And I think that's the biggest thing is like and Elliot, correct me if I've still understood it incorrectly. But it drops me down to that 4% interest rate for that first year. And so if people are so rate conscious, right? Because I remember again in my subprime days and even today, people just get so fixated on that rate. What am I actually paying? And so if they are, brag about it then, right? Like you can now say, I bought my house, because the first question that some of your friends might be asking is, what interest rate did you get? You're not lying if you say 4%. You don't have to say that, you can have a little asterisk conversation of for the first year. But if you want to have some bragging rights on it, that allows for your clients that are sitting there saying interest rates are way too high for me. Hey, we may have a program that we can talk about that can get you a 4%. Again, in that world of their interest rate would be 6. We may be able to get you an interest rate that's 4%. Let's figure out that starts at 4%. Let's talk to some options. And I think that's some email campaigns that you guys can even set out, right? I'm always thinking in sales worlds of what's the thing that's going to be that clickbait for somebody. And if you have people that are sitting on the fence, is there that potential option of sending out an email with the subject line that says, would you be interested in a home if I can get you into an interest rate starting at 4%? That's got to at least give you some active conversation. And then you can get into the nitty gritty and the details of how that's actually going to work. But I think every single person would at least have some sort of well, how would I do that? I saw interest rates or this, or I just got quoted that. And that can help get them off the fence and actually start those conversations, but also help you grade your client. Are they really interested, right? Because there's so many people that have said I'm interested, but then they wind up just paying that back and forth with you. If they're really interested, that's got to be some good clickbait that they're actually going to start actually engaging with you on.
Absolutely. I think an email or a text message, it's a great way to get it out there. Just re-engage those clients, re-engage people who've been sitting on the fence, exactly like you said.
Yeah. And so I think a lot of times when we think about these buy down programs, we think about that they are specifically for buyers, but there are benefits for sellers because although the market is moving and changing, again, from my own perspective, there are still aged properties sitting on the market, whether they're overpriced, whatever the case might be, or they're just not the attractive home to the masses. So there are benefits to sellers too. So Elliot, I don't know which ones you want to start with, but
Yep.
Let's talk about the benefits that both buyers and sellers can see from this.
So I'll start real quick with the sellers, because this is an area that not a lot of agents, I'd say, are utilizing. The nitty gritty of it is it's always cheaper pretty much than a price reduction. So that's just kind of fundamentally, you can cover the cost of a 3-2-1 or a 2-1 or a 1-0 buy down for a lot less money usually than a price reduction. And we have another slide that talks about the average price reduction, I think, after this, right? That's one that most people are probably aware of. Now, another one this is where I like to step in and kind of help out. I'll call the selling agent so they can participate in a 3-2-1 or a 2-1 or a 1-0 buy down without it costing them any money. Really, that's the mortgage professional's job, though, to call them and explain it. And what happens there is my buyers, what they're doing is they're offering the difference that it would cost for a buy down. So let's say it's $15,000, right? And it's an $800,000 property. They're going to offer $815,000 and ask for that $15,000 back to cover their buy down. Now, sellers might not have heard of this, and they might be looking at the offer and they kind of are confused. And maybe the selling agent understands it, but this is just another area where whether you're an agent or you're a mortgage professional, you can step in and kind of help explain this and show the seller, hey, you're going to net the exact same amount of money. You're going to get exactly what you want for this property. The client's going to pay for what they want for this property, but it's also going to help them out with their affordability. So that's just another really nice way that it works for sellers. In lieu of a price reduction or even just participating in it and being willing to, accept an offer like that. What we've seen is for those sellers that I work with or the selling agents, the ones that are willing to participate in it, they've been getting offers above and beyond what their asking price is, because now that buyer can actually essentially afford a little bit more payment every month. So it's worked out really nicely there. That's why I kind of wanted to touch on sellers. For buyers, fundamentally the same thing, right? You're going to have a lower interest rate. You're going to have a lower payment every month. The nice thing about this too, if anybody isn't aware of this, the money that goes in for a 3-2-1 or a 2-1 buy down, it basically sits in another account. And if that client goes to refinance their property before they've used up that subsidy, it gets taken off of their outstanding principal balance. So that's huge. Normally, when you're buying a rate down for 30 years, there's a recoup period, right? What it costs for the rate versus what your monthly savings is. And that just goes away if you refinance. So the nice thing about this program is you never lose the money. And then for us at eMortgage, we do what's called Client for Life. So we provide a free refinance for anybody buying a home in 2023, just because we know that rates are eventually going to go down again. And then they don't have to worry about, well, if I do this now, am I going to have to be timing it? Am I going to have to be checking this in? They get plugged into our system. We're going to automatically let them know as soon as it's time to refinance. So it's kind of, nice for both buyers and sellers. And for buyers right now, while it's still a little bit in buyers' favor, it's a great opportunity to try and take advantage of this.
Yeah, and I think like when I'm going to actually post this, and what you guys will see if you guys are watching this on a computer, I'm not sure how it looks on mobile, is I'm publishing something under the offers. You might see a little red button pop up. Unfortunately, this is just how it has to be presented on this type of tool. Because I think the biggest thing here, especially on the seller side, is it gets really creative, to Elliot's point. I think a lot of people on the sell side think that the seller has to now say, I'm going to pay that $25,000 to help that buyer get that, when that's not necessarily the case, but it is hard to explain. And so the thing I've tagged in the offer section, I actually did put in the chat too, is if you guys want to talk more about specific programs, you have specific clients that, whether it be buyers or sellers, that can benefit from this, and you want to make sure that you can speak in an educated manner about it, Elliot and Ryan will be calling people back to be able to talk through what those like different programs are. And I mentioned this on a slide down the road, is they are actually open to communicating directly with your clients, because I think sometimes the game of telephone is that you walk away from this and you're like, wow, I never thought about that. I do have a seller that I would love to be able to offer something, but he doesn't want to give money away. I don't know how to properly explain it. Let Ryan and Elliot do it for you, right? They have these conversations every day, all day. And so it allows for like them to actually educate not only you guys, but also educate your clients. So they're very, very involved with that. And that's a big part of the reason why they are so successful, because I think a lot of people get so into like just transactional, give me your clients, make it clean. But in a lot of cases, like they have to really communicate with the client to help them understand that. And so if you have that person that's on the fence about doing something, they can have this like no cost, no commitment conversation to really help them understand what could be benefiting them, especially I think when it comes to the seller side, because I think that is a big selling point to be able to say, you're not going to you don't have to put in a penny to be able to take advantage of this, but you can still get buyers that come in. And so learning about that. So whether you click on the offer section or you go back to chat, I've linked a page that you guys will be able to just put your information in there, and then it can proactively reach out to you and figure out additional questions that you guys might have about any of these things that we're going through. So this kind of gives an example. So Elliot, if you want to talk through this page.
Yeah, just real quick. This is a really just clean example of what the average price reduction looks like on a property versus covering the seller funded buy down, right? And if the average purchase price that we pulled from our data is $50,000 and the sales price was $800, that seller is going to net $750, right? And for the exact same property, if they were going to fund that buy down, it's $18,000, is going to net $32,000 more than doing a price reduction. This is great for properties that have been sitting on the market for 30 plus days. I used this recently for a very good friend of mine. They put the property on too quickly before they were able to do any staging, and they needed to really kind of update some things. So it just sat for a little while. They weren't getting any traction. I sent one of my loan officers there, gave them an example of what the seller funded buy down looks like. We put together some flyers. That very weekend, they got 5 offers. The cool thing about that too is I don't even think the buyer ended up using the 3-2-1 buy down, but what it did is it helped generate conversations for that listing. And it's, it sparked that initial conversation. What is this? What's this? What are you guys open to? And from there, maybe it makes more sense to do a $20,000 price reduction, or they don't want the buy down, but it just helps you as an agent generate more conversations for your sellers and for your buyers.
Yeah, definitely opens up conversations for everybody, and also just gets people into homes that maybe they wouldn't have been able to immediately get out the gates with. And so with that, I think that what's important to talk about is just generally eMortgage is a brokerage. And so there's lots of benefits to working with a brokerage over a lender. They can tap into lender stuff, but they also have every single option and program that exists out there. So Elliot, I'll let you take it away with this slide.
And I'll be really brief because I know we're running towards the end of our webinar. But yeah, we can do the 3-2-1, 2-1, 1-0 buy down on FHA, conventional, VA, jumbo, USDA, and even non-QM now. Really, what I wanted to talk about with this slide, just for all the agents out there, is if you have buyers that have been turned down, right, for a conventional loan, maybe they haven't filed their taxes, or they don't have enough W-2 income. We have so many other different types of programs as a brokerage that the phrase I like to say is, look, everybody has a puzzle. You can put together a puzzle a bunch of different ways. Let's figure out how to put together their puzzle. Those turn down files, that's leaving money on the table. That's, potentially not helping out a client. I've gotten a lot of those over the last year and a half because there were a lot of lenders that were only taking cream of the crop, W-2, cream puff borrowers because they're fast and they're easy. We really like to say that, we're not going to turn anybody down. And if for whatever reason we can't do a loan, we're going to figure out a game plan on how to get them there. So if you haven't explored a bank statement program or profit and loss program or a debt service program, or you just want to know more, reach out. I'm happy to help educate you guys. Ryan would do exactly the same. We've been able to convert a lot of clients that way just because they couldn't qualify conventionally and they didn't know that they had any other options.
Yeah. And talking to getting all this stuff set up and fixed, one thing that came out of the conversation is Ryan got the nickname of the fixer. Literally, if there were those people that you're like, there's no way they've been declined every single place, they came to Ryan and somehow he would sneak those people through. So it really is they have lots of different options that they can work on. So if you guys do have those clients who are actually out there, they're like, who cares about the interest rate? Let's do this. I want to buy a house. And you've just been hitting dead end after dead end. I think looking at these options, talking to these guys is definitely a really good way for you guys just to really double check and make sure, because again, through the conversations with Ryan, I know that they've been able to find things that people really thought were absolute dead ends. They've been able to find actual homes for with loan products. So I've mentioned this already. If you guys want to have conversations, you can, if you're on a desktop, you can scan the QR code that I have on the page right now. You can click the offers section of the page and actually put your information in there. They will reach out to you, answer any questions. They are licensed in multiple states, and I don't have a slide where I've listed everything out, but if you're on this call, they can help you. It's basically the best way to be able to say that. They're also there to help educate your clients. And so I put together this slide for you because there are a couple benefits that as sold.com, we want to, again, be the educational resource, but we always want there to be something in it for you guys and what you guys can offer your clients. And so one thing that we've been able to get from Ryan and Elliot as part of this and part of our sold.com kind of world is any clients that they talk to and they are able to work with, they are going to offer $1,000 credit. That credit can be used towards closing costs or an appraisal. So that's huge, right? Not only can they provide you guys some different options that maybe your clients aren't aware of, they can help educate your clients, but also at the end of the day, they can help save your clients some money too. And I think that also looks good on your end is, hey, I'm going to help you guys work with a lender that can actually give you guys a credit towards whatever you guys want to actually use it for. We kind of talked about this too. Tricky clients, they've got you covered. They can do a lot of different things for you. But as I mentioned, eMortgage, Ryan and Elliot, they are brokers. And so I think one of the biggest benefits to that is, unlike banks, and you guys have probably felt this with lenders that you guys have spoke to before, they've got their 9 to 5 hours, right? I'm not saying that Elliot or Ryan want to take a call at midnight. They probably enjoyed their Valentine's days yesterday and didn't want to have those calls coming in. But at the end of the day, they can take a phone call whenever they want. They're not sitting behind their desk in a bank and only working those specific hours. They can help you whenever you guys need your help. And I think that's one of the biggest selling points, right? not only, and I think that's the benefit of you guys as agents don't have hours. And so what's more handcuffing is that you're answering your phone and you're trying to help your client. And we all know clients want the information yesterday. And now you can't get a hold of the lender. And that is really, really frustrating because in most cases, you've recommended that lender and it doesn't look good if they can't get in touch on both sides. So I think this is generally outside of that $1,000 credit. There's a lot of like non-tangible benefits to specifically why we've vetted and why we've talked to eMortgage and specifically Elliot and Ryan, because we wanted to make sure that as you guys talk to people, just like real estate agents, there are not every lender, not every agent was created equally. And so this allows for you guys to really be able to be educated, not only for yourselves, but your clients, but also have some added benefits in there. And I think what Elliot also passively talked about was free refinance, right? So if you are getting people that are in some of these programs, that's a huge selling point for somebody who is, let's get you into this house. We're going to monitor and continuously make sure that there isn't a better loan program for you. And if something does pop up, we're going to refinance you for free. So you don't have to worry about constantly incurring all these different costs as you get into your property. So that's one of the other benefits that I failed to add on to this, but is a huge one for you guys. So I'll kind of bring it back to this slide, and Elliot, I'll let you kind of end with any other information that you want. But this is a good way for whether you want Elliot talking and Ryan talking to your clients or specifically to you about what they can do. This is just a good way for you guys to have some introductions to some really great guys.
Yeah,
Elliot,
that was great. I mean, and thank you again. Yeah. Thanks everybody for, joining this and participating. Again, our whole goal is to try and empower you guys, whether you work with us or not. I just want to empower agents to go out there and be able to do their best for buyers and sellers. Of course, we would love you to work with us, but we're going to help you out regardless. The Client for Life program has been huge for us. That I send to every agent. We have a nice PDF that you can show it to your client. It's just another peace of mind for that, for that borrower. And that's really what we're trying to do is we're just trying to, ease their minds, get them, accustomed to and normalized to where the rates are at today and help you guys build your business and continue to build your business, both with buyers and sellers. So anything we can do to help anybody out, we're here for you guys. We're here to help educate. We can, dive further in depth about how these programs work or some of the other programs that we talked about. We're here for everybody.
And for those of you guys who are in the Southern California area, both Ryan and Elliot are located in the Southern California area. I think both in Costa Mesa. So they're local. So if you guys are local in that area too, I'm sure that they would love to have any sort of interfaces with you, your offices, your agents, just generally you guys. So I think that's also conversations that you guys can have offline through that contact form. So thank you guys all for joining. This is something we continuously want to be able to do is offer these different ways for everybody to work together and just help everybody sell more properties, right? We're a success-based program, and so are you guys, just naturally through your businesses. And so the more that we can help just continuously educate people into all options that they have available to them, we want to be able to connect industries and help everybody be more successful across the board and really make 2023 everybody's best year. So I appreciate everybody joining. There should be a recording that goes out after this. You'll get a replay, and so you guys can replay and watch that after. If there's any materials, charts, or anything like that after, use that form. You can request it through Ryan and Elliot, and they can send you any materials. And I'm sure that they have materials and actual collateral that they can share with you guys too, whether it be for your open houses. So definitely reach out to them if you guys have any additional information. Thanks, guys, for staying on a little bit longer. We had kind of allocated about 30 minutes to be respectful of your time, but I appreciate you guys all staying on a little bit longer. And I hope you guys have a really great weekend. And thank you, Elliot. Thank you, Ryan, in the background for moderating all the chat and questions that came through. And those will be the guys that you guys talk to as you fill out that form. So please let us know if you have any other questions. You can come direct to sold.com and use our chat on our website. Otherwise, thanks, guys, for your time. Appreciate it. Thanks, Elliot. Thanks, Ryan.
Thanks,
Bye.
Anna. Thanks, guys.